As mentioned, I'm Scott Grams. I'm the Executive Director of the ILCA. And I don't think it's possible to be an ILCA member these days and not hear the association talk about workers' compensation insurance. We've become kind of obsessed with the issue for a couple of reasons. The first is that from an enforcement standpoint, workers' compensation insurance is probably the clearest distinction between a business operating legally and a business operating illegally. And of course, one of the reasons why an illegally operating business chooses not to purchase workers' compensation insurance is because it's so expensive, as you all know. Through our work on things like the empowerment packet and also our passage of House Bill 269, we have actively sought measures to achieve the ILCA's goal of 100% compliance in the landscape industry for workers' comp. But the second reason is the sheer cost of workers' compensation insurance in Illinois. And for many years, Illinois has either been in the top 5, sometimes I think as high as the top 2, for the most expensive comp insurance costs in the country. Any contractor who does work in surrounding states definitely knows the premium differences between us and some of the other Midwestern states can be relatively staggering. So for these reasons, the board authorized the ILCA to review options that could potentially bring down the cost of workers' compensation insurance for our members. This led me to a conversation with John Fisher of the ILCA member firm GCG Financial. And John's a member of our regulatory and legislative committee, so he understands kind of full well some of our issues with comp from both an enforcement standpoint and from a cost standpoint. And then John connected me with Stuart Levin and Jason Levin, and we discussed some of the options that are at our disposal to potentially reduce some of the costs for our members. So I kind of want to say that today it's a bit of a work in progress. The purpose of today's call is to illuminate some of the central issues that surround comp, and then also what would be potentially necessary to set up a private group within the ILCA. Also, Stu and Jason are available to answer any of your questions. And at some point, if the board and the membership do desire this path, we're going to need to obtain some personal information from businesses like payroll records and loss rates. And it would be in order to get any type of plan or group underwritten. So today may be the first step in that direction. Now, I know it's late June in the landscape industry, so I really appreciate the people who were able to be here. We're also going to be recording this webinar and posting it to our website. And then there were a number of companies who expressed to us that they could not make the webinar today, but they do have a lot of interest in being part of some type of closed group in the future. Just to let you know, you are going to be muted throughout the call. If you do not enable your audio pin, you can click on your name and then you can enter it at any time. This is going to improve your experience and also going to make the call a little bit easier for us to manage. And then if you have any questions, I ask that you please use the chat feature, and then questions will be answered at the end of the call if there is time. And so with that, I'm now going to turn it over to Stu and Jason, and we can go ahead and get started. Thank you, guys.
Thank you, Scott. We appreciate the opportunity to speak to you today. We're going to try to be somewhat brief, but we welcome as many questions as you have in the end of the call. As Scott said, this is a beginning of a discussion, and as far as what line of coverage, we are going to stick specifically to workers' compensation at this point because I know it is the largest issue that you face from an insurance perspective at this point. As a quick review, I did want to cover what is workers' compensation and what does it protect your business from. Workers' compensation is basically written in 2 parts of coverage under 1 policy. Part A is the statutory benefit. So that means whatever happens to your worker, whatever their medical costs are because of that employee accident, as well as whatever indemnity payment, meaning any lost time that they would have, is covered through Part A, which is a statutory portion. The other portion of workers' compensation coverage is Part B, which is referred to as the employer liability section. And that section would have to do with maybe the spouse of an injured employee coming after you saying that you knowingly put that employee in a situation that you knew was going to cause them harm. So those are the 2 main parts of workers' compensation. As Scott said, Illinois is one of the most difficult states as far as workers' compensation costs are concerned. He is absolutely correct in saying that it is amongst the top 2 in cost, California being the other. Cognizant of that, we were trying to explore different ways that we can help control cost, and that's what brought us to today. So if we can go over and discuss the following points, I think that we can move forward and give you a better idea on what this program might have to offer. So under discussion points.
I just wanted to mention, this is Stu Levin, by the way. Thank you for joining us this morning. To add to Jason's comments about workers' compensation and definition, one thing to remember is all workers' compensation policies are designed and approved the same in each state. So a workers' compensation policy in Illinois for one insurance company is going to be the same as a workers' compensation policy by another insurance company in Illinois. They're all the same, which is a little different than package policies when you're talking about property, general liability. There can be different policy conditions, but the statutory nature of workers' compensation makes so everybody's on the way the coverage works is the same. The only deviation are the pricing, really.
And carrier quality. Right. So some of the other discussion points we will go through today, strength in numbers, and that has to do with, obviously, the association, merit-based rates and premiums, insurance company selection, claims administration, and safety assistance. So we'll jump right in with strength in numbers. So what is one of the main driving factors in having this call, having an association, and having a group of people who are experiencing common issues, and that is strength in numbers. So in an association total premium, if we were to combine what that premium looks like as a group versus everybody's individual policy, there's obviously a lot more premium there. So what does that mean as far as the industry is concerned, the insurance industry, that is? And what it means is you'll have a lot more insurance companies that are willing to potentially offer terms, offer rates, offer discounts, because as opposed to having, you know, one policy that's between $20,000 and $50,000, if you have an association of policies that are several $100,000 up to $1 million, there's obviously a lot more interest in the insurance marketplace and the carriers because they look at it as the ability to make money, which is obviously what insurance companies are in the business to do. It also helps from the standpoint of your ability to persevere after a loss. So as an independent business, let's throw out that a work comp premium is $30,000. Being that the average lost time claim in Illinois is now in excess of $46,000, you have just one of those claims and your account and your policy is now considered unprofitable. That can put you in an issue with getting renewal coverage. It can force you into an Illinois assigned risk plan, which is very expensive and potentially very punitive. So when you have the ability to put an association plan together and have several $100,000 or $1 million of premium, you then have the ability to absorb a claim. Therefore, when the entire group does well, the insurance company does well, and that then gives you the opportunity to continue along in the program and possibly even show a profit, which is obviously what the insurance company is looking for in order to achieve better rates, better credits in the future. I just touched on a minute ago what a voluntary policy is versus assigned risk pool. I imagine that as a number of you had started your businesses at some point, you had to get involved with the Illinois assigned risk pool. And that is for new businesses or businesses in which the voluntary insurance marketplace will not provide a policy. So where do you go? You go to the Illinois assigned risk pool. Those policies are typically 20% above what the state rates are, and they carry with them some heavy down payments that are necessary and substandard audit procedures that are very, and auditors that are very difficult to deal with. So any of you that might be in the assigned risk pool might feel the advantage of an association plan in that you may then now be eligible for a voluntary policy, which would again offer more attractive rates, and among other things, which we'll get into. Looking forward, in an association plan. And again, when you have the ability to put all these premiums together and become more attractive to the marketplace, there's a potential for dividends in which the insurance company will say, based on your loss performance over the last policy term, we are going to say that if your group experiences less than 20% of the premium going into claims, we're going to offer a small percentage back at the end of the policy term, which would then be a dividend plan. So that kind of concludes the slide of strength in numbers and what that idea of grouping as an association is versus being independent. So one of the concerns that we felt you might have is if you're in an association plan and you're doing a great job and your claims history has been very good, is there a fear perhaps that your rates and premiums would be higher in the association plan because of others? And that's where we get into this slide, which we're going to talk about merit-based premiums. And the type of association plan that we're proposing, that we explore, that type of association plan would still provide individually underwritten policies for each business, just under a master code of an association so that the claims can be tracked and the profitability of the association can be tracked. So having an individually underwritten policy will allow you to retain your member-specific NCCI experience modification rating. So I'm sure most of you are familiar with what an experience modification is. And when you go into a PEO or other types of arrangements, that experience mod can be suspended, or you take over the mod of another organization. In the model that we're proposing, you would still have that experience modification. Therefore, if you're receiving a discount because of your good loss history, you're not going to lose that. Also, there's potential, depending on what the breakdown of what your firm's operations are, what your business does, whether it be hardscape, softscape, lawn maintenance, that you may be eligible for an Illinois contractor's premium adjustment. And with that, the idea behind it is when you have to employ somebody in the Chicagoland area, you have to pay a much larger wage per hour than somebody who would be working in, let's say, Effingham. So Illinois has put a potential credit out that says if your experience mod is under a 1.0 and that you have enough payroll and classifications, you may be eligible for additional credit. So that's another issue that we're discussing today. Also, being that they're individually underwritten policies, your firm, your business, would still be available to get schedule credit. So additional credit on your policy, which you may have already, for good past performance and good loss history. So you don't lose that by entering into the arrangement that we're looking at exploring further. And one thing that our agency does that a lot of our contracting clients enjoy and use as far as job costing is we call our true net rate factor. So if you've looked at a work comp policy, you'll notice that there are classification rates and premiums. But you also notice that underneath those, there's any number of different entries and numbers, whether they be state fees, expense constant costs, terrorism costs, all these different things that factor into your rate. However, they're not reflected on the top rate of your policy. So what I'm getting at is we offer our clients what we call our true net rate factor, in which we will look at every single item in your workers' compensation policy and drill it down to a single rate per classification, a single rate that you can use to job cost. So we try to take the guesswork out of, hey, what am I actually paying for $100 of payroll? When I pay my employee $100, the top of this says I'm paying $4.60, but this doesn't add up. Forget about it. What we like to do is drill down to a specific one rate to help you job cost.
I'll just mention that for those of you who are on the call or who might listen to this recording later, who are really interested in how an experienced mod is figured and what a contractor's credit looks like, we have some detailed slides for you for those who can't get enough insurance this morning. We'll be glad to give you that.
Thank you. So we're going to move ahead to carrier selection. So on a larger level, just to explain a little bit more about myself, I'm Jason and Stu. We work for GCG Risk Management. GCG Risk Management is an independent insurance agency. So what does that potentially mean to you? You're probably dealing with a broker right now for various lines of coverage, whether that be an independent agency or a direct writer, such as the State Farms of the world and country companies. As an independent agency specializing in business insurance, we work for our clients. And in that, we have partner contracts with 25 insurance companies directly and hundreds indirectly. And we have the ability to go to these different insurance companies on your behalf and seek terms and conditions, rates, premiums. The bottom line is we work for you. We use A-rated carriers to seek quotes. So going back to what Stu was saying earlier, although workers' compensation is a statutory coverage and all policies are written the same, policies are only as good as the insurance company that's backing them. Therefore, we use A-rated insurance companies. One thing that we wanted to dive in a little deeper is workers' compensation insurance companies versus generalists. So what does that mean? Many of you might have your entire insurance program, general liability, workers' compensation, umbrella, auto, equipment, all with one insurance company. And sometimes that is a good way to go. What our experience tells us and what we are in favor of is splitting off the workers' compensation portion of your insurance policy for two reasons. Reason one is you can get a workers' compensation insurance company that's a specialist. They concentrate on workers' compensation. Their claim adjusters know workers' compensation. They don't dabble in a whole lot of different things. They have the loss control available. So that's one reason why we think going independent, workers' compensation and what we call monoline insurance companies make the most sense. And that leads on to the second point, which those carriers have specific experience and they have the ability to understand the challenges that your business faces because they would have done a lot of contracting, for instance. And we also like, with our contracting clients, to offer insurance companies that have what we call a pay-as-you-go option. That has become extremely popular in the construction industry. We know there are ebbs and flows to your cash flow. We know there are busy times, there are cash-rich times, there are cash-poor times. What a pay-as-you-go workers' compensation option would give you is the ability to go in on a weekly, bi-weekly, or monthly basis, enter in your payroll, and simply put, pay for what you use. So where you're in the thin time of year, you don't have an $8,000 workers' compensation payment. However, on the inverse, when things are very busy, and you put in your payroll for, all the spring cleanings. It's obviously going to be more expensive that month because, again, you are paying for what you use.
This is Stu Levin again, and I'll be glad to take you through the balance of slides. We'll give Jason a breather here. So we'll talk about claims administration, which is always fun. But on the serious side, one of the big differences that we feel we bring to our clients is we don't leave you to the purview of the claims adjusters to fight on your own. Basically, we have our own claims unit. We're your advocates, so when you do have a claim, you report it to us, and then we report it to the insurance company and maintain a claim file that's unique to you and unique to that claim. We understand that you need us when you need us. There are traumatic claims, obviously, serious claims that can be very gut-wrenching when they happen, and we understand that. And there's also OSHA requirements for certain types of claims where you have to notify OSHA right away. And we will help you manage that if, unfortunately, you get into one of those situations. Like I say, we understand you need us when you need us. We will work to get you an adjuster assignment within 24 hours of your claim. So if that injured employee needs medical attention, needs tests, follow-ups, or whatever is needed, we'll make sure a claims adjuster is assigned, the claim number is given, and contact information is disseminated to you and the treating facility. Not to be redundant, but again, we're on your side. We understand that claims is the main driver of your premiums, especially on the work comp experience mod side. It's our job to keep these claims as low as humanly possible to get out of them. As you guys probably already know, operating in Illinois, it's not a very employer-friendly state as far as workers' compensation claims adjudication and the Illinois Industrial Commission. It has gotten a little better, but we anticipate that taking a little backseat now with a new administration coming in. But there are tools that we bring to bear on your side that can be used to keep workers' compensation claims costs down and keep those runaway claims that go on forever to a manageable size and a manageable time element. What some of those tools are, as listed on the slide, a nurse case management assignment. We'll push for surveillance, we'll push for independent medical examinations, we'll push for functional capacity exams, whatever we need to do to get that employee back to work and that claim closed out, we will do it, and we don't let that process be managed completely by the insurance company.
And the fact of the matter is, most insurance adjusters have several hundred claims on their desk at any time. So what we like to say is that they're not managing those claims are managing them. They're taking a reactive position when they get requests in, and they're just trying to keep up. So not only do we try to partner with insurance companies that have lower caseloads, but by us being the squeaky wheel on your behalf, we try to keep your claims to the forefront or on the top of the pile of the adjuster's desk so that they get the most attention.
And we're all aware of the Monday morning injury where an employee was playing softball, playing soccer over the weekend. They come in on Monday morning and all of a sudden their knees hurt, their back hurts or whatever, and they decide to turn that in as a workers' compensation claim. I'm not going to sit here and lie and say, well, we can make that go away. We can't always make that go away, but we can certainly red flag that claim and take every step we can to make sure that all tools are brought to bear to try to get that claim denied if we have solid evidence, and or that claim settled for pennies on the dollar instead of going through the full process. As part of our flagging system, when that claim comes in, if you suspect that there's fraud going on, that goes to a special treatment, and we will flag that claim. We will make the adjuster aware. We will stay on top of that to make sure that whatever can be done will be done to try to get that claim either denied or mitigated. The next portion of our presentation here is on the safety assistance. Safety is not any magic. Safety is based on consistency, and most companies' problems with safety is they all have great intentions at the start, but after a couple months, that kind of takes a back seat. So we feel it's our job to regularly follow up with you to make sure that you are taking the time to do toolbox talks, especially at a new location, that the foreman at least take 5 minutes to talk about safety, talk about the environment that you're in, talk about the special material handling situations that may come up on that particular site, and that's extremely important. Again, it's not rocket science, it's consistency. And we will try to help you. We'll provide you Tools, which is the end of the slide, online tools and resources. We have handouts. We have a lot of materials that can help you there. Best practice bulletins, so tips on the best way to handle lifting, the best way to handle new environments, confined space issues if you're doing digging kind of operations. We do have the materials and some expertise there that we'd be glad to handle for you. And most of you do have trucks on the road. We find some of the most serious claims, not only for landscaping contracting operations, but any business operation with a fleet, is your biggest exposure is out there on the road from a liability standpoint. So we make it a point to help you monitor motor vehicle records, to help you put in place a watch list for drivers that are on the fence that we need to keep track of. And those just are some of the safety assistance tools that we can bring to bear. Jason had a point.
Just wanted to mention on the best practices bulletin, one advantage of an association plan is that we would be the unit that would receive all the information on claims. Being that we would have all that information, without giving away anybody's specific business or the employee name that got hurt, we can develop a listing of percentages of causation of claims. So if most of our claims are coming from a certain area, whether it be slip, trip, fall, strains while carrying a certain item, we would be able to compile that information and put out a best practice bulletin to help mitigate that exact claim from occurring again, because we would then have that data.
So closing up, and we're almost on the button here with our 30-minute timeline. I'm proud of that, Jason. Good job. Participation is the key to marketability. So in order to get you the best program possible, the best rates possible, the best everything possible on an association plan, the more the better. And from an insurance company point of view, what we're doing is we're avoiding adverse selection. And what that means in regular language is, if we just have a few people that want to enroll that are having a hard time or impossible time obtaining insurance, and they're the only people who want to get into the plan, we're going to have a hard time putting one together. The more people we have, the more we're spreading the risk among a lot, and we get the most attention in that, and the best terms in that way. And we have the tools, the carriers, and the expertise to broaden the product offering up to the Landscape Association members, to not only include the workers' comp, but also property, liability, equipment schedules, and auto. So we do have the ability to partner up this program with one of those programs. And if we are successful in putting this program together over the long term, we can look at other advanced insurance options, such as a captive insurance program unique to your association, where you and us basically run the program. We let in who we want to let in. Everybody's rates are based on their own history, and everybody gets to also share in a percentage of investment income. That's kind of down the road if we're successful in building this program with you folks. Also, another option is self-insurance, which is the probably final step in managing risk for the association and the association members. But we have to start by establishing an association program with association statistics based on your own group, your own premiums, and your own losses, and then we could look at some of the other more advanced underwriting options.
Absolutely, and we really appreciate your time. We welcome questions to the bulletin board. Scott and Marissa, thank you so much for making this available to us to speak to your membership today.
I had a question. Obviously, there's some things that have to happen in order for the ILCA to move forward with a self-insurance plan. A group insurance plan. What are some things that a landscape company could do today or next month in order to either improve their experience modification rate, lower their costs, what are some things that you see out in the industry working with landscape clients that they're currently not doing or ignoring, that they should be doing that could help potentially lower their costs just on their own, and working with their own individual brokers?
In working with their own individual brokers, I think a lot of people, or a lot of brokers, a lot of agents don't take the time to split off the workers' compensation portion of the program and seek what we call monoline insurance quotes. So just workers' compensation. To split that part off, work comp is actually what we would say in a very soft market right now, meaning that there are companies that are bidding against each other very aggressively. However, if a broker or agent doesn't take the time to split off the workers' compensation and send it to insurance companies that will just offer work comp quotes, then they may very well be leaving some money on the table. Does that answer your question, Scott?
Mm-hmm.
Okay.
Sounds like we answered everybody's questions during our presentation because nobody's asking any. Our contact information will be available through Scott and his team, and it's also on the last piece. Please feel free to give us a call if you have any questions. Even on your existing program, if something's not making sense or you have a claims handling question or an underwriting question, we'd be glad to help you through it if we can.
We did have a question. Is the location downstate going to put us in a higher rate with metro rates? You mentioned the higher risk was on the road and our highway risks. I assume we are considerably less. If you could scroll up, I'm sorry, I think I missed the top of that one. Yeah, would a location outside of the Chicagoland area influence those rates, whether they're, southern part of the state or western part of the state?
If we're talking about auto insurance, yes. I mean, the garaging location of the fleet or of the vehicle will have an effect, positive effect, meaning less premium for a less congested area downstate versus the Chicago metro area. If we're talking about workers' compensation, the leveling factor there is what we talked about with the contractor's credit program. For the metropolitan-based risks, the rate per hour that's paid up here is different than it would be in Cairo, Illinois. So depending on your specific hours and division of labor, you might qualify for a contractor's credit to offset some of that difference in cost.
Yeah, the idea behind it being, if you have to pay somebody who works on the North Shore of Chicago $26 an hour for the same work you would pay somebody downstate $12 an hour, why should you pay more work comp on that? Because work comp premium is solely based on the amount of payroll you have by classification. So that credit is potentially available as a leveling factor to even that playing field.
And it's just as an aside on that, is that something that someone would be asking their broker to look into, or is that something that someone has to apply for on their own in order to get those credits?
And the broker should be, if there are eligible classifications on the policy, the broker should realize that, and then should offer a worksheet to their insured. Once the worksheet is completed, the broker should collect it, submit it back to NCCI, which is the council that comes out with your experience mod, and they will make the determining factor where they will let you know if you qualify for any credit. The credits range from 1% to 40%, depending. They are largely based on what is being paid an hour, and obviously it has to be pretty high in order to qualify, and also on your loss activity. Only companies with a experience mod of 1.00 or less are eligible for consideration of the contractor's credit.
Are there any other Illinois-based associations with the same number of members that have a similar program to what is being discussed?
I'm sure there are. As far as within our firm, we do have a program that's similar in auto, and that's comprised of about 42 businesses at this point. I know that our employee benefits department does a lot of association works with on the health insurance side, and that I know there's an association plan available for veterinary risks. So I know throughout our firm, and we're a national firm, part of Alera, that there are other groups. Yes.
We have another question. How long would it take to start a program? So let's just say the ILCA board approved this, they began solicitation to the members. Explain maybe the next steps of the process, and then also how long that potentially could take.
Yeah, so everybody's on their own insurance effective date, and we wouldn't look to change that. However, regardless of effective date, we would look to collect as much data from as many members within 60 days on what their current policies look like, rates, premiums, insurance companies, their experience modification factor, which they should all have. And with that information, we should be able to make a preliminary marketing packet to insurance companies to determine the viability and what the pricing would look like in such a plan. Providing that goes well, we would then collect further loss statistics. I would say that the potential start date would be no sooner than 6 months from now, to collect all that data, market it to at least 5 insurance companies, have those sit-down meetings, potentially here at the ILCA as well, so they get a feel for how business is handled, and to put together something that would be competitive and something that would not just be a one-year solution, because we certainly wouldn't want to put anything together that did not have some sort of staying power.
I think that does it for questions. So we are going to end here. I do want to thank Stu and Jason for providing their time today. Thank you guys very much.
Our pleasure.
We will obviously be posting this to our YouTube account, and then sharing it with some of the companies who are not able to attend, as well as any ILCA members who are interested. And then we will be following up with the membership with some next steps when those arrive.
Thank you again.
Much appreciated.